Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick on today's show. We're going to recap the move that Twitter made yesterday, talk about Costco's strong June comp sales that were out yesterday after the close, earnings from Walgreens, Boots Alliance, and Bed Bath & Beyond, both pretty disappointing. We'll talk about Carnival Cruise Line. They're reopening, or their German subsidiary is reopening here shortly. The reopening trade is a thing now. Disney's reopening, Carnival's reopening, the theme parks are reopening. So we'll talk about that. We'll take questions from our chat. Two guests on the docket today. First up at 8:15, we'll be joined by Marc Chaikin, and then at 9, I'll be joined by Rance Masheck. He is the president and founder of iVest Plus. He's been in the brokerage game and the trading game for like 20 plus years. So he'll have some good thoughts for us there. Let's bring Joel on now. Joel, give us an update here on what's happening in the overnight session. But first, unmute that mic.
Joel lost.
No, I got so many things going on here. I see that mute button there. Plus I got a little warning sign.
It's like his thing. You know, it's his thing. So
I know I've been bad.
You've actually been you were doing so well. For like 3 months. Yeah. You probably never messed up at all. And now you're doing it every day again. You go back to your old habits.
When Spencer was gone, I was just so on top of everything. And now I'm just kind of getting lazy with Spencer being back. But anyways, 18-point range overnight, 3170. We got some highs up there, folks. We got 3 highs between 31 in 70 or 3174. So there's your major resistance. That's what need to break through to get to 3,200. Pre-market low 52.25. They just missed my bid at 51.5, but canceled it now with the jobless claims coming up. Crude down a nickel at 40.85. Gold down 520 at 18.1560. Silver, boy, man, that's on a roll. Up 14.4 cents at 19.305. Bitcoin right between 9 and 10, down $50 at 9,460. Good morning, Triple D. How are you on this Thursday?
I'm tired today.
How come?
One of those days that the kids are up all night. The girl comes in about 2 a.m. to the bedroom, throw her in the middle. The boy comes in about 5 a.m. and it's just sleepless night, one of those. So sometimes the kids sleep through, most of the time they don't. So anyway, so I'm somewhat used to it. So I'll still have energy for you, don't worry, but I'm kind of sleepy today.
And how was your after hours session?
You know what? It was slow too. And it's more of the same. I mean, this is like Groundhog Day around here. You see this market and it's FANG leading the charge, tech leading the charge, and they don't really care about anything else. And that was what happened yesterday. It's what happened the day before. It's what happens in the pre-market here this morning. I mean, it's Apple, it's Microsoft, it's Amazon, it's all the tech names leading the charge. Netflix as well, breaking over 500 for the first time a couple days ago. We should give it some love because it's now $500 stock. Valuations matter zero to any of these companies. It's just a matter of that they think tech. Here's the trade right now that the market thinks. They think no matter what, if we have to go back in and start to get shelter in place again, go back in the lockdown, they think tech works. If we go out and we start to go and do our things, they still think tech works. So this market just wants to own tech stocks no matter what. They think tech is a safe haven for COVID. It has been. Maybe it is, but if the market if it really started to get ugly, everything will get hit. Don't kid yourself. But I mean, the tech stock, I can't argue with you. The tech stocks have been better than anything else. And I was looking at my holdings in my invest portfolio, and we know I've got a lot of cash in there. But of my equity holdings, I'm over 50% tech. I was always tech heavy, but I'm even more tech heavy now, probably because it's just grown so much. So those are the stocks that keep going up in the long-term portfolio. I have a lot of healthcare, a lot of pharmaceutical stocks. We know I've talked about those before too, but I'm heavy tech.
Yeah, well, I mean, just the increase in price, and
Well, that's it. I mean, I look at some of these, and all my biggest winners are all the tech stocks, and some of the smaller ones too. I mean, it's anything tech has really, if you have a tech stock and it has been going up, you're in the wrong tech stock. We'll say that much, because it has been just an unbelievable march for the NASDAQ. I mean, look from the lows. We got down to $166 on the QQQ. We're now $261. So we're 100 points off the lows from 3.5 months ago on the NASDAQ. You're talking about what is that? 166. So it's like a 65% up move on an index in 3.5 months. It's been an absolutely incredible run for the NASDAQ.
And coming up in the earnings season as well. And we're actually going to have a guest on, I believe, next week, David Trainer, who does the analysis of earnings. And he doesn't think that his preliminary look now, he doesn't think it's going to be as bad as everyone thinks. So, boy, you just get a halfway decent earnings season here. And boom, 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 another leg higher.
Well, it hasn't started well, I'll tell you that, because every single earnings, and obviously we haven't really gotten to the meat of it yet, but we have seen disappointments pretty much in every company that's reported so far. We had LEVI report disappointing earnings. We had Bed Bath & Beyond last night, which we can talk about, disappointing earnings. And then we have Walgreens this morning, despite call buyers from Fast Money saying last night there was call buyers in there and the stock was going to go higher. Wrong. It's not. It's going down 4.5%, and the guidance is terrible.
They weren't short the stock, and they were putting a little hedge on, right? There's zero possibility.
They look,
of that.
And this is what I've talked about. This options activity. This is still like finding a needle in a haystack, because you don't know what the hedging activity is, and you don't know who's actually speculating. You don't know if the person knows anything. Everybody's speculating all the time. Just because you see a big option buyer doesn't mean they know something. Sometimes they might, but 90% of the time they probably don't. So when you're just looking, oh, there's a big option buyer, the stock's bound to go up, I don't think it works. I mean, I've looked at this stuff for 20 years, and I know there's a lot of people who really follow this stuff. In my opinion, I've never seen a trader that, and I'm bright trading prop traders, thousands of traders come in. I ask Rob, I'll ask Rob that question, but I've never seen a trader that just, made a lot of money just looking at options activity.
And just think about, if you really look at it as a contrarian signal, what if the person was short the calls, right? And they wanted to cover them going into the print, then they're actually wrong today.
Well, this is the thing too, Joel. I mean, on every options contract, there's a buyer and a seller. So, you say, oh, there's a big buyer in calls, or somebody bought a whole pile of calls. Well, somebody sold the calls too. Somebody sold the calls. So that's the other thing. It's kind of, I don't know if it's pet peeve or not. Like, I just don't use it. But they talk about this every single night on Fast Money. They do, this options activity thing, and it's hit and miss. I think 50% of the time they're right, 50% of the time it's wrong. What's that telling you? I don't think it's an edge. That's my opinion. Also, just my opinion.
I think if you follow that, if you're going to do that, then you just got to follow the open interest, and then you get that.
That's where you can make some money, and that's where I do use options, and this does work. It's the pin action. So when you've got, a stock that's moving and it comes into a big strike with a hell of a lot of open interest, that's where, the stock might turn. That's why do you think stocks turn on the $15 price, the 17.5, the 20? I know there's dollars for a lot of options now too, but on smaller companies, they're still going increments like that. They turn on these big whole numbers because that's where the option strikes are. So once you get past the 20, then everybody who's got the 20 calls is in the money. So a lot of times you see these things turn around. Why? Because market makers will short the stock at 2010, 2025, 2050. If they're long the calls, lock in the profits. And, and I've done it the same way too. Like I talk options. I don't trade options anymore, but I used to trade them actively a decade ago. I just find equities is better. I find I don't need the leverage. First of all, I'm with Bright Trading, so I don't need the leverage. So because I have that through Bright Trading. So why not, people say, oh, why don't you buy some puts on Tesla? Well, if I'm bearish Tesla, I'm just going to short the stock. So I don't need the, and obviously people want to protect themselves a little bit further, but that premium you pay, it eats away, even when you make good calls, we've pointed that out on the show too. You buy these puts, and then the stock goes in your direction, doesn't go enough, and you lose money. I short the stock and it goes down at 10 cents. I make 10 cents. I don't have to worry about the time premium eroding on me or the event premium, because we know ahead of an earnings event, there's an event premium in there as well. So I just short the stock, that's probably why I don't trade options as much as I used to. But I get it. I mean, you have a small account, you want to try to make some money. Options, are a good alternative when you don't have capital.
Okay, tell us your fast money story real quick, and then I got one thing I want to share, because we got Marc Chaikin coming in at 8:15. But I got one thing I want to share. Tell us your fast money.
I don't know if I have a fast money story. Oh, my tweet!
Jesus, man.
My tweet! I forgot. Yeah. So, anyways, Melissa Lee asked for tweets there last night for the 6 o'clock show, because Kramer's off this week, so they're doing special Mad Money from 6 to 7, and they're just taking questions from individual traders and from retail trade and from whoever. So she was asking for Twitter questions. So I was like, I'll give her a question. And I was all witty and everything. I watch Fast Money and they like the wit. The producers put all the wit to it. I was like, I'll give them the wit. I think this was pretty good. So anyways, they did not read my question last night. I was disappointed. But then I tweeted, I was like, that's okay. I'll read it on my own show, Benzinga's Pre-Market Prep, so we can have our listeners listen to it. So anyway, I'm going to give this question to our listeners. And here's how it's going to go. In the chat, if you think the stock's going to go up in the next month, put a 1. If you think the stock's going to go down the next month, put a 2. So here's the question that I pitched to Mad Money last night. I said, I don't know the answer to this one, so that's why I was asking it. It's about Workhorse, WKHS. I said, retail traders rushed into Workhorse for the past month, but in the last few days, there's been a stampede for the exit. Is this an opportunity to get back in? Or will investors buying today be left with a long face? I was all witty. I was like, they'll read that. I gave them all the wit. The producers don't even have to do anything with it. So WKHS, 1s and 2s. If you think, I don't remember what did I say? If it's going up, put a 1. If it's going down, put a 2.
Mixed.
That's what you said.
It is so mixed. There's what he would have 3.
Oh,
I don't know what a 3 means. I guess 3 is sideways.
Yeah.
Holy mackerel, there's some people responding on the 1s and the 2s. It is mixed. I'm mixed on this one too. I don't know, because the last day, I'm like, oh, it's starting to show a little bit of life here again, but you got a lot of overhead supply. So this is a tough chart. What's Joel Elconin think?
I don't know. Just based on that response, I want to sell calls and puts.
You can sell the straddle, Joel.
Yeah, sell the straddle or sell the strangle, that just would go absolutely.
Just sell options.
Oh, yeah. If you want to lean on that low from 2 days ago, that's what I would do. That identifiable out of 54 cents. I just think it's a different run this time, because you got some people shaking their head, man, why did I buy this at $22 or $22.90? So you got a different scenario. You just don't, there's pain. There's people that want to get out. So I just don't think you're going to have the same kind of run. I want to share one story, and then you guys can tell me if this is a buy. It's either a sell signal or do nothing signal. I needed to do golf shoes yesterday, right? My other pair were just ripping apart. So I went, and I always try and just go and get the same pair I bought before. I go there and they didn't have it.
They're a creature of habit.
Right. So I'm going through, and they don't have this and they don't have that. And then, so I went from FootJoy. I started looking at Nikes, and I'm like, oh, do you have this and this side, this and this side? And the guy said, if you're looking at Nike or Adidas, we can't get anything. We are told they are shutting down the factories for the rest of the year. So I don't know if that's just related to the golf equipment.
All right, this guy's, we would know. We're in the news here. There's no way Nike is shutting down the factory.
Okay, so that it's a buy signal. It's a contrarian signal. But
I'm sure
they were short on supply.
The shoe store isn't more informed than the.
This is a huge place. I'm telling you, there's supply chain for all the retailers and stuff. I don't know.
I wouldn't doubt that maybe the supply, is somewhat limited. We've had some factories. Obviously, maybe they weren't producing as many as they were when we were in the lockdown and shelter in place. So I wouldn't be shocked if the supply actually is down right now. And maybe the demand is still there, but I don't think that there's a truth that they're shutting the factories down. There's no way that's happening.
Yeah, I think that'd be out there. If and hey,
Maybe it was just
That's
for
bad
maybe it was
rumors
just for the
starting.
golf shoes that I wanted.
That's bad rumors just starting there.
Anyways, I ended up getting a pair of FootJoys that are similar to the pair I had before. But are we going to bring Mark in, or should we actually do a stock here?
No, bring him in.
I'm bringing Mark in right now. And
He'll do the stocks.
Before I do that, I just wanted to tell Dennis maybe. So CNBC didn't choose your question. I'm sorry.
I know. I was sad. I actually started to cry about it.
Maybe it just wasn't as witty. Have you considered that it wasn't?
It was witty. Did Mark hear my question? It was witty.
You're blacklisted from CNBC anyway.
I think that's what it is.
Since you dropped that microphone that one time on your air, that was
my
funny.
My first gig on CNBC didn't go well.
Your only gig?
It's like you get called up to the majors there from the minors too early, and you're not ready for it, and they never gave me a second look.
All right,
Mark, the earpiece fall out. So the first time when I was on CNBC the first time, 2010. I was talking market structure and my earpiece fell out. Like I'm not used to TV. So I had this little earpiece. I had to go into the Detroit office there and my earpiece falls out. I can't hear anything. I'm like bending down looking. I come up and I'm just like, I sit there. I was like, I don't know anything they said for the last 30 seconds. So they asked me a question. And I just started spit something out and they're like, never have this guy on again. He doesn't know what he's doing. So I think you're right. I think I'm completely blacklisted.
That is on YouTube.
It's somewhere out there.
I know.
You got to go and really probably search for that one. But yeah, I was on CNBC twice. I got invited back and then I guess I wasn't good the second time. They never had me back on again. That was back in 2010. So.
Well, we are bringing Marc Chaikin back here. He's the founder of Chaikin Analytics. He gets invited back on our show. Marc, welcome.
Hey guys, how are you?
We're pretty loopy for a Thursday. I guess summer heat's getting to us a little bit, but
I hear that. Yeah, we are too. We celebrated my birthday. We actually had people in our house, and I had physical contact with someone other than my wife for the first time in 4 months. So.
Happy birthday, Marc.
Yeah, thank you. Thank you.
What day is that? We got to write that
down.
Yesterday. Yesterday.
Happy birthday.
Well, happy belated birthday. We got to put that in the calendar, Spencer. I need a pop up on that.
Balloons.
So I can text Marc Chaikin next year on his birthday on the day.
Balloons.
So you're finally 60, huh, Marc?
62.
Okay. All right.
There you go. You were talking about that crazy stock Workhorse. What are people thinking?
What do you think about Workhorse? I'm really torn on this one. I think it's a story. I think it's a bubble burst, and I think it's kind of over now, but who knows? Sometimes these things get life again. What are your thoughts on WKHS?
Well, when you were talking about that, I was trying to figure out a theme for this segment, and I think you got to look at three things in this market. You got to look at what we know, what we see, and what we think. And what we know is that the Fed is just pumping so much money into the system. You can call it funny money or an oxygen high, that there's liquidity to the max. And what we see is momentum. And we see things similar to 1999. But what we think is, gee, the market's pretty stretched. It's crazy. Nikola goes up 40%, based on an analyst recommendation. And I think you got to separate all those things out. So I didn't know what Workhorse was. I clicked on it. It looks like it's battery powered cars and
electric trucks,
planes and planes. This is really, you look at John Templeton, we're getting into that euphoria stage where markets die. But based on what we know, which is that the Fed is going to keep pumping liquidity forever, QE infinity, you just can't get bearish. You can, but you got to be nimble like you were with Tesla the other night. But, this is a strange market, and we're going to look back and say, oh my God, it looks so much like 1999. But in 99, you didn't know when to get off the train. And if you got off too early, there were some money managers like Marty Zweig who started shorting these things or were out of tech, and they underperformed so badly that assets fled through the door. And that's the risk for money managers in underweighting tech or in case of hedge funds going short. So it's an interesting dynamic here, but I just don't think you can get off the train yet.
It is tough. I mean, this is a little bit of a hot potato game in some of these tech stocks, like valuations, in a Zoom don't make any sense at all, but the party still just continues. So you try to short these things and you get murdered, you don't stay long them, and you underperform, like you were saying as well. So you have investment managers that are definitely chasing the movers. I mean, Apple goes up another $10 yesterday. It's just in full monster mode here now. I own Apple in my long-term portfolio. At one point in time, I thought it was a value tech stock, but at this point, now you start thinking it starts getting up 26, 27 times earnings, and you start thinking, wow, it doesn't have the growth it used to. This is starting to get a little bit stretched.
It's getting very stretched, and I'm hearing people who've owned Tesla for 2, 3, 4 years who are now saying, and smart money managers, big names, this is going to be $1 trillion company someday. It's going to be the largest company in America. So the seeds of euphoria are being sown here, but we don't know when the harvest is going to be reaped, and it's really tough. I zeroed in on Zoom to punt it out. And, you're trading at multiples of revenue that are insane for a company that really isn't making an awful lot of money. What's the price to sales ratio, and what's the discounted cash flow 3 to 5 years?
Crazy.
It's crazy. There's interesting though. One of the big firms, I think it might have been Sogen, did a piece distinguishing between new tech and old tech. So there are a lot of people making money here in both those places. So old tech is Microsoft, Adobe, Apple. New tech is Zoom, Peloton, even Facebook and Twitter. And they really are different because old tech are cash machines, plain and simple, not affected by COVID, not a trendy play on the stay-at-home economy. And to the extent that you have so many of these funds that are programmed to go, long 60, 40 bonds or volatility-based strategies, Dennis, you know better than anybody, CTA, equity, longs, and so forth, where does the money go? It goes into the SPY, into the S&P 500 futures, and eventually it flows into the stocks that we're talking about. There's an interesting dynamic, by the way. I'm sure you've spotted it, but if you haven't talked about it, it might be interesting. On days when old tech goes up, biotech goes down. On days when old tech goes down, Regeneron, Vertex, Alexion, United Therapeutics go up. So they're clearly, it's not risk on, risk off. It's okay, if we're not going to play old tech today or even new tech, well, let's go to biotech. So there's interesting internal dynamics. I watch this because my wife Sandy has a portfolio to die for in basically old tech and biotech. But there is this sort of subtle rotation day to day, depending on what the mood of the market is.
I mean, this is the market. It's all about the rotation. It's been going on that for a long, since March, that this market doesn't rotate out of stocks. It just rotates into different stocks. And we've seen the dynamic even from the reopening trade. This is the day the reopening stocks start going up is the day tech stocks start going down too. So it's not even, the biotech and the tech. You start seeing now, it just seems like tech and biotech, and they just don't care about the reopening stocks. But for a long time there, it was like, okay, when Boeing, American Airlines, and Carnival Cruise Lines and Disney is all getting a bid, you start to see the stay-at-homes like Amazon and Peloton and Shopify get hit. But, now, like you're saying, they've been just completely almost ignoring some of the reopening stocks here for the last 3 weeks. They've been just money just sitting there doing nothing or leaking. And now they're just maybe what you're saying is rotating within tech itself and just completely ignoring the reopening stocks. What's it going to take? My question, what's it going to take to start getting interest in the Boeings again and start getting interest in the American Airlines again? Are these just stock companies that are in so much, pain right now that investors have finally figured it out and they're just leaving them for dead?
Yes.
Yes.
Plain and simple.
The answer is yes.
There are a lot of tells out here in terms of the industrial economy, but yes, I mean, until we have a definitive answer, I don't think you're going to see it till after the election, till December. We're still in the first wave. We haven't tamed the wave yet nationwide. And go back to April, nobody's talking about this, but after the summer, when conventional flu season comes around, we're going to get the second wave. If anybody tells you no, hasn't looked at previous pandemics going back to the Spanish flu. So I think you've got to get through that phase, which is September, October, November, before you get a clearer picture about whether people are going to travel, whether they're going to take cruises. I can tell you that Viking cruises, because Sandy went on one in October on the Rhine, they're offering like 50% discounts with no prepayment penalties up to a day before if you book a tour for November now, a cruise in Europe. And so they're desperate, absolutely desperate. There is a chart I want to look at, though.
Yeah,
I think there's a big tell here. JP Morgan, tell me what you think.
They're not bouncing. It's just hanging out here.
They look like they want to break. JP Morgan looks like it breaks into the low 80s. I mean,
it's sitting here hanging on a cliff.
Stock. And so what does that tell you? The best bank in America, arguably the best bank in the world, and it can't get out of its own way.
Yeah, like the market, you think about what the market's done in the last 2 weeks, like the S&Ps, and we went straight up really for a week and a half here, to the tune of up 5%. And there's JP Morgan in that same time period, completely flat.
Yeah, so let me throw the flip side here on you, Mark, here on this JP Morgan, because you see this a lot in stocks, and a lot of times it's the sign of an institutional accumulation here. You go back to June 26th, and they're not all consecutive, but like 92 even, 92.18, 91.93, 92 even. Yesterday's low, 91.80. It just seems like someone is really thirsty for this stock here, $92 area. And a lot of times when you see that, the big boy, and to me, I look at it as the big boys loading up here. I kind of am looking at this as like maybe a lower risk, long down to that level. I'm just,
with no upside potential, in my view. Look at Chaikin money.
I always take the bear side, and now I'm trying to take the bullish side, and Mark shoots me down.
No, but when I'm confronted with price action like you're referring to, I look at Chaikin money flow. And Chaikin money flow has had 3 green days, meaning above zero, and it's an oscillator since February. And negative Chaikin money flow right now is telling you that there are no dip, there aren't dip buyers out there. Because if there were dip buyers, the stock would, not just find support, but bounce in its range. And if it closes high in the range, then Chaikin money flow tends to be green.
How about, could you give me the Chaikin money flow on work last couple days?
Showing life. I'm long it.
No, before yesterday.
Slack.
I don't want to see it. Slack, yeah.
WRK, Slack.
Hey, don't tell me it went positive yesterday, because that doesn't do, today, because that doesn't.
I'll tell you something better than that. It's been positive every day for 10 months, except for 2 days, a week in April. It's so strong. So in stocks like this, you want to look for an oversold buy short term. So you want to look for that buy in June.
So you got clipped when you owned it after earnings, then, based on that, because it had that.
But it had a ridiculous run up too, Joel.
True.
At earnings.
Yep.
Yeah, I mean, if you take a look at the last 4 earnings reports, Slack sold off after every one of those earnings reports. Good, bad, or ugly.
Too high expectations.
They all beat expectations, but when I see a stock like that, the after earnings trade is when it gets oversold on a short-term basis, whatever you're using, RSI, MACD, and Chaikin money flow stays positive. This is the strongest pattern. We call that, stealth accumulation, because if there were true sellers in the stock, they'd be selling. You'd have a residual of sellers at the close. When you see Chaikin money flow stay at these elevated levels, and it's really high right now and has been since mid-May, you just want to buy those oversolds. That's when you want to buy the dips.
I'll tell you when I bought it was just 3 days ago, and I just had myself a defined out, and I was looking, this 30 wants to hold, and this is a stock that the story is still potentially there.
Alive, yep.
So I thought if it broke down through the low of the mood, 29.54, I'd get out of it. But I was like, I'll take a shot here. So I bought it in the low and right around 31, between 30 and 31. I can't remember exactly what I paid, but in the last 3 days. And then obviously had a really good day yesterday. So I'm holding on to it. I think eventually could even, try that 40 again. So this is a trade / but I've sometimes turned trades into investments on the good way. Spinner's talked about that too, where I've got something on for a trade. And I was like, oh, it's really working. It's working and working. And I was like, well, if it keeps working, I keep bringing up the stop. And all of a sudden, you're in a stock that's really working well. We got a number coming out here, folks.
Yeah, you should fill the gap, by the way. Slack's biggest problem is Microsoft, because Microsoft Teams
Right.
has
They come
30
out
or
with-
40 million users. It's part of the package, the Office package, and more people are using it. So Slack's got some great accumulation, and it's a great product. We've used it internally, but tough to compete with Microsoft in a cost-conscious world.
For sure. And that's why have yourself a defined out when you're getting into these trades, especially the ones that are trading with these crazy valuations. So when you enter the trade, kind of know where you're going to get out if it doesn't go well. I was saying I'll get out if it breaches the 29.50. Now with the candle yesterday, I'll probably bring up the stop. But as long as you put any trade on, as long as you know where you're getting out of it. Just like I was saying with Tesla there, Mark. I tried the short side and I got lucky on it, obviously, but I was kind of reading the tea leaves too, because we had that one, and these are day trades. I mean, you started seeing Shopify roll over the day before, Amazon started rolling over. I was like, the Tesla could be next. And it's funny how all these stocks, even though they're nothing to do with each other, these Momo trades, and the momentum starts to stall in one of them, a big one like Shopify, and all of a sudden you can see, that follow through. Now, again, that only lasted a day. And obviously,
Not
we've
even
already
a
seen
day.
Shopify start to catch a bid, and Amazon catch a bid as well. And Amazon obviously was sold out because of the Walmart news. But I mean, just watching, there's a lot of relationships here, intricate relationships here that can be. There's edges extracted from these relationships.
We just got that number, Dennis. Initial jobless claims for last week: 1.314 million jobless claims filed, which is actually lower than what they thought it would be. The estimate was at 1.375. So we're still over a million.
Still persistent, yeah.
Still bad.
Almost no reaction in the futures market.
No, none at
unless
all.
my machine is frozen. It looks like the
No,
machine is frozen.
Pre-market high 31.70. We have some numbers above. We have your intraday high from Tuesday was 74 and a quarter. Your true high on Monday was 74 and a half. Now on the Globex session, they snuck it up to 31.84 on Tuesday overnight, but I'll still use that. I'll make that 31.74. I'll make that my line in the sand here and not worry about that 84. If they can get to 31.74 today, I think you got a good look at perhaps 3,200.
I agree. 3180 to 3200 was my resistance zone in my market letter for the
What
short-
time
very
frame
short
do you
term.
look at the money flow on? It's like a
Yeah.
daily, right? There's no.
Well, it's 21 day. It's a 21-day average of the daily numbers, so it's pretty. It's an intermediate measure of accumulation and distribution. When I built it in 1982, it was meant to fluctuate around zero, and then we saw these patterns of persistent accumulation and distribution, which is what you're seeing in Slack right now, where on the down days there are bids under the market that sop up all the selling, and the stock can close lower but close higher in its range, and that tends to that creates positive Chaikin money flow that day.
What about the IWM? We're getting a question here from Bull from Trading. Dennis, Mark, and Joel, thoughts on IWM?
Small caps and value stocks are just out to lunch. If you're a bottom fisher, it's a pretty ugly pattern there. It's a classic flag pattern, and Chaikin money flow is now negative as it's coming, as it made a slight overbought. It's not a pretty pattern.
I mean, we talked about this in the show, I'd say at least 2 months ago. And what I said was, I think the QQQ long versus the IWM short continues to work. And that has absolutely been the case. Yeah. I looked pretty bad on that call. I can remember because I made the call before June. And then all those reopening stocks started blasting off. And I was like, oh, maybe I'm wrong here. I saw Boeing going up and, Amazon going down. I was like, I don't know, maybe I made a bad call, but after a month and a half, it looks like that I was right with that call if you had a long enough time horizon there, because obviously value and has very much underperformed tech.
Yeah, the problem with the IWM, and it always has been, is 30% of the stocks in the Russell don't earn any money. Some of these are small biotech companies, where they've got a stage 2 drug somewhere, but it's hard to value in normal times, and B, these companies are not thriving in the current economic and health environment.
All right, so Mark, give us some closing thoughts here, just overall market thoughts, because the S&Ps, let's just go to that SPY, and it's been absolutely resilient here in the face of increasing cases. Obviously, tech is the big reason. Probably there's a lot of tech in the SPY, and it keeps getting bigger in the SPY as those stocks continue to go up. But what are your thoughts here? Let's just look at the S&Ps. We haven't made a new high since the beginning of June. Is that a concern to you, or what are your thoughts on this S&P?
I'd say sell them above 3250 if you are an intermediate investor. That we'll get up to that 3250, 3300 level. It's going to take a lot to get it up to 3400. It's going to happen. It's going to happen probably before October earnings season. But I think the market is the QQQs right now. For the last 20 years, we've talked about the SPY being the market. It's no longer the market. It's a market of stocks, but the market is the QQQ if you're a trader or a swing trader or even an intermediate term investor.
All right, Marc Chaikin has been on with us. He is the founder of Chaikin Analytics. Highly recommend checking out that platform, if not just for the Chaikin indicators that he has invented, but for everything else, the displays. It's a great research tool. Highly recommend it. Marc, thank you so much for the time as always, and keep on staying safe.
Pleasure, and to you all. I'm looking for your tweets, Dennis. They make my evening.
Not Fast Money's show apparently though. So.
Oh, well,
thanks, Marc.
Don't take that personally. I've had my romance and my falling out with them over the years. It means
thanks, Marc.
Means you're a good guy. Be
well. Thanks, Marc.
Right.
Not much of a reaction off those jobless claims. Just hanging out here. I didn't even have to tell you to cancel orders, Dennis.
Somebody in the chat told me though, so I did cancel them. So in the YouTube chat, they're like, "Dennis, go wide." I was like, "Okay, I'll go wide." I'm back out there again.
Yeah.
Let's cover some stocks here.
HFT stop, HFT on.
Let's just rip through some stocks. Let's start with Bed Bath & Beyond. Earnings out yesterday after the close. They weren't good. They lost $1.96 per share.
That's impressive.
Last quarter,
to be able to lose that much money.
The estimate was that they would only lose $1.22. Sales $1.31 versus $1.39 billion. So they missed both the earnings and the revenue numbers for the quarter. They're closing about 20% of their stores, and even though their e-commerce sales grew 82%, their overall sales fell about 40%.
I hated the stock for about a decade. I never got it when it went to 2014, 15. Obviously, big towel store is what I always thought. I know they sell a lot of house goods, and I know the stuff is fairly cheap in there, but they're mall-based. I'm just not a fan at all.
Not really mall. They're kind of
outlet mall based.
Yeah, yep.
I mean, there's so many better places for your money. Why invest in a company that's losing that much money? They were struggling before COVID.
True.
And again, we keep saying that. I don't want to buy companies that were struggling before the virus hit, especially retailers. I mean, it's bounced back a long ways from the April low, so it's been a good trade. It got down to $3 when they thought everything was going out of business, and they thought this one too. I think Bed Bath & Beyond could still go the way of a JCPenney. So I'm not a fan at all. I know there's activist action in there, and I know that drove it up, a year and a half ago. But
where are they now?
I've been fading, I've been saying to fade that every up move in Bed Bath & Beyond for a long time. I would do no different here. I mean, you're down 8%, you're selling in the hole now. The price of the sell was ahead of the earnings yesterday because it was probably predictable they were going to disappoint. So Bed Bath, and give Fast Money some props because they said they were going to disappoint. So there you go. The options activity was right on this one. It was wrong on the other one. But BBBY, I just think better places for your money. Sorry.
I will buy this stock when they get rid of the 20% coupons.
You can't sell anything without the coupons. Any company that needs to discount that. Hey, okay. So, and I had this Quiznos franchise that.
Oh, Quiznos!
I gotta tell the Quiznos story. So I had a friend. I was already trading. I was trading full time, but I had a friend who was Subway manager. He's like, "You gotta try these subs, these Quiznos subs." This is back in like 2002. So I was like, I go and try. Sub was awesome. He's like, I'll run this store for you, Dennis, but I don't have the money to do it myself. So I went 50-50 on him. I'm like, okay, run the store, and it's all good. Anyways, he gets so we buy the franchise in 2002. We take like a year to find like our location and stuff. It takes time. Meanwhile, he gets a better job at the bank and says, I don't want to manage it now. So now we've got a Quiznos franchise with no manager. And so we have to find a manager, and we do. And actually, I went in there and started, making subs too for a couple of weeks. I was sitting on the line thinking, I used to have a nice cushy desk job. Now I'm making sandwiches. So I kind of went backwards here. But anyways, because I'm working with a bunch of 16-year-old kids, because that's for the most part what you hire 16, 17-year-old kids to run your sub shop. But that's a side note. But anyways, when we bought the franchise, I was still going through the training, and there was like all these coupons. They were couponing. I was like, spiny senses were saying, that's not good, that we have to discount to get people to come in. The subs were too expensive. So they're awesome. They're good sandwiches, but they were way too expensive. So anyways, I can remember we had lineups outside the door on day one. And I said, to my partner, Tom, I said, man, we need to sell this thing, because this discounting, we're getting a lot of customers and we're doing okay, but we need to get out of this. And we eventually did get out of it, but took a long time to get out of it. So we ended up taking a haircut on it. But moral of the story is, when you got a coupon to bring in your customers, you don't have a very good business. So you think about, how many sales do you get on Apple phones, iPhones? How many sales? Not a lot, because you know what? People are buying those things anyways. Yes, they do deals through your mobile data provider, but they're still getting paid. So when you're buying companies that rely on couponing to get customers in the door, it's a recipe for a poor stock and a poor company. Bed Bath & Beyond, I want no interest in it, as long as
$9. Support at $9. That's all I'll say on that one.
I'm not buying a $9.
No, I'm just telling you.
I'm not buying $9.50. I'm not buying a $10. Would you, could you? What's that kid's book? Would you, could you? Remember Green Eggs and Ham? No, I wouldn't buy Bed Bath & Beyond with ham in a car, in a boat, in a plane. I wouldn't buy Bed Bath & Beyond. I don't like Bed Bath & Beyond. Sorry. And it's not going to be like I try it and then all of a sudden at the end of the story, no, I do like Bed Bath & Beyond. No, I don't like Bed Bath & Beyond. Sorry, next.
I will defend some of their products, but I'm with you on the overall business. Let's do Walgreens here.
I am not opposed to shopping. Like, if it's giving me a nice coupon, I'm going to get a deal or something, but I don't want to invest in that business.
All right, Walgreens Boots Alliance here. Earnings out this morning. Q3 adjusted EPS 83 cents versus $1.18 estimate. That does not sound good. Sales, they actually beat by a hair, $34.6 billion versus a $34.32 billion estimate. They did, however, give some weak guidance. They gave an EPS guidance for the year, guided in the mid to high $4 range versus a $5.42 estimate. While they were at it, I don't know if I've seen this before. They announced that they were laying off about 4,000 workers and also raising their dividend by a cent, 45 cents to 46 cents.
All right. I got a thought here.
I don't know if I've ever seen that one before.
Yeah. They've raised the dividend. So they report disastrous earnings, 83 cents versus $1.18. I mean, think about it. People still got to get, I guess they sell other stuff there, but a lot of stuff that's being sold at Walgreens is sticky stuff. Like, people buy that stuff no matter what, consumer products, obviously your prescriptions, some of these, you think about the grocery stores that did well. I guess they didn't use Walgreens to stock up. The earnings, the EPS guidance, 465 versus analysts was a 542. So that's very light, cutting the workforce and doing everything wrong. I honestly think management sat there and said, man, our stock's really going to get hit here. What can we do? Let's raise the dividend. That'll help. And they raised the dividend a penny. It's not helping. So I don't want to own this stock either. I don't hate it as much as Bed Bath & Beyond, but I don't like this one either. Its stock's been in a downtrend for years. They're not performing. I mean, this was an environment that maybe they could have held their own in. Like I said, a lot of the stuff that they sell was stuff that maybe people were stocking up on, and that didn't happen either. People were not going to Walgreens to obviously stock up. They were going into, we know Kroger did well. We know Walmart kicked some butt. We know Costco kicked some butt. Walgreens did not get any of that. So I think, the stock, it's not that far from a 7-year low here. Obviously 36.65 being the 7-year low. I think eventually it sees it.
Yeah, you got a step down seller here. Just their foot on the pedal here on the downside on the sessions of on the lows of the pre-market session. I do see some. It's kind of interesting here because you had that panic low at 36.65. Then buyers stepped up the next day to 37.50. But then to really get the stock in any kind of size, it took 1, 2, 3, 4, 5 days. And those 5 days were, let's just call it 39.60. So if I was looking for a pop, it's been there 5 times back in late May. First time, maybe get a bounce off that level, but I'd be keeping, I wouldn't be whacking this thing at 39.60, looking for 37.50. Let's see what happens at that level.
Question coming. We got lots of questions. Let's do some tickers here for 10 minutes here because we got a pile of tickers coming out. Somebody wants to know, go for the W, wants to know about Virtue Financial. My thoughts on it. I own it. So I rebought VIRT about 2 weeks ago when it had all this consolidation in the 22-23 area. And I was like, I know this. I don't know their specific algorithms, but I know the overall type of business because I'm running similar stuff. I'm obviously very small scale compared to Virtue, which is trading everything, but I run algorithmic trading. I run, do different types of various market making, different types of statistical arbitrage. And I've had my best 4 months in 10 years. So I think Virtue Financial is probably kicking butt and taking names. So I was like, I want to own the stock again. I bought it back. I've had it, and then it had the huge run back in March when it got 24, 25, 26, and then it did the same thing in May, and I sold it. I rebought it. I think eventually it's going to take out those 26 highs. I think eventually it's going to 30. The dividend 3.76%, but they got to be just killing it on the trading right now because it's just been such a nice, choppy, volatile environment. They're inefficiency-based trading, just like I am. They're going to be doing really well right now. So VIRT, I love.
Yeah, there's a couple highs here. I see it just over 26, nothing major. What was this? Why did it fall off a cliff like that? Was that earnings there? 26. When it
in March?
Was it March?
Yeah, fell off.
Okay, it was the
that's
market.
COVID. That's when everything was going out of business.
Yeah, but okay.
They didn't care back in March. So, okay, you can look at every chart on every stock, Amazon, everything. In the first 3 weeks of March, they were raising cash. People were in trouble. You had margin calls coming. They were selling stocks indiscriminately across the board. There was no separation on COVID stock versus not COVID stock. It was we need out of stocks. So that's why, the March, if you look at every single chart on, bring up like Coca-Cola, you bring up anything, Procter Gamble got down to $95. You bring up anything in those first 3 weeks of March, they were throwing everything away. Because they needed to raise cash. You probably had margin calls coming in. The market fell 35% in 3 weeks, 4 weeks. It crashed. You had margin calls. You had people just selling because they absolutely had to. And there was some diamonds in the rough, and Virtue Financial was one of those companies that they were probably just kicking butt, and that was the buying opportunity. But then it was difficult. I mean, I didn't pull the trigger on buying anything on the 3rd week of March either because it looked like we were in serious trouble. Obviously, government came, and obviously we flattened the curve. I still say flattening the curve helped us out of this more than anything, to stay at home because, that's when the market really started to rally. But, government was backing up too. Obviously, Fed firing whatever bullets they could, and it worked. And, we're back up, and now we've got separation. We have some companies doing well, some companies not doing so well, but overall, it worked. But if you look at any chart back in March, they were selling everything because that's margin call.
S&P's making new highs on the pre-market session as we talk, 31.70.50, inching up towards those pair of highs at 74 and change. So could even get there by the end of the show.
All right, checking some tickers in the chat. So let's do a few more of those. We're being asked about Momo, M-O-M-O. This is one of those Chinese internet names that's kind of caught up with, it's caught with this trend here of the pop in Chinese internet stocks. So
it's been a very much underperformer though. Social media stock, and you think about social media, it's actually done pretty well, and Momo has not. I don't know and follow the company individually. I have owned the stock before just from a technical basis, but it's been, Chinese a lot of Chinese stocks have done very well, and Momo it's got some life in the last 3 days, but it's been a very, very much underperformer. So I don't know. I don't follow the story enough to say, whether I'd be a buyer here or not. Maybe on pullbacks you do, but the trend is still ugly. I mean, when you look at the overall trend here, it's definitely from the upper left to the lower right for the last year and a half. So I'm not sure why all the issues, but, maybe the social platform. I don't know if they operate some other stuff either, but I'm pretty sure it's social platform over in China. It obviously isn't doing as well as Facebook.
It's up 90 cents today, 22.28. Look at this 24.50 area. I see a couple highs there, so has some room to go. I've identifiable out. Ugh, maybe under the low from yesterday. I don't think I'd want to risk down to 1661 in this one, but clear 24. You got some room to the upside. Currently trading up 90 cents. Do we have is it just the China play today, or is there specific news on
There's
this one?
no news on this.
You see Alibaba again, Joel?
Oh, I know.
Just
What?
blast off monster mode. It's like gone. This is a huge company and just getting bigger. I mean, since yesterday rise 19, it goes up another 10 points here this morning. I own it, long-term portfolio, so I'm happy about it. But holy mackerel, it's a big move for Alibaba.
Yeah,
50 points in 4 days.
Yeah, just hanging out here. Someone 269 just looks like maybe a little bit of seller. Really tight range here in the pre-market high, which is his all-time high, 268.97. But with this kind of chart, when you take running like this, use your half and whole numbers. Maybe see if there's anything in the New York book to hold it down, but certainly nothing over the last 3-4 sessions.
Big move.
Big move for a big stock.
What about Costco here? Speaking of companies that are doing well, we mentioned Costco briefly in the Walgreens discussion, but Costco came out.
Finally, Costco. Look at that.
June sales yesterday, year over year, June sales were up 11.5%.
I like buying Costco on pullbacks, not on rallies. So that's one thing. Company is fantastic. It's the exact opposite of a Bed Bath & Beyond. It's a company that fires on all cylinders all the time. They don't have to do massive. They have a couple of little sales, but they don't have to do mass discounting, get people in the door. How they're lined up outside the doors, they're there to get in your Costco's. So this is a company that's always firing all cylinders. Love the company. Love the stock. It's a little bit pricey here. I'd like it on a pullback, but you get back down to the lower 300s, I'd be a buyer. But I don't know if you get that chance or not. Eventually, it's going to probably start breaking out again. I mean, this is just the kind of stock that eventually is going to go. You're going to see Costco making new all-time highs eventually.
This is usually a fader, a big off these numbers. If it's way down, it usually comes back. If it's way up, I keep a real close eye, though, on what happens if we get to 522.33. The reason I'm giving you that number, it's called 33.40. It splits a pair of highs from April 16th and April 17th. So there are two highs. Took a while to do it. Once again, you had nice base there, just under 300. You had accumulation. Now you have the pop. Let's see. Actually, you had a matching double top at 318.05. So perhaps if you do get a little bit, if you're shorting this thing early, get a downdraft to 318.05. Might find some support there. Sellers for the last 2 days trying to get their stock back.
All right, Dennis, did you play Twitter at all yesterday? Because Joel and I talked about this on the afternoon show, but we talked about the news that an eagle-eyed Twitter user spotted their job listings and noted that they potentially are going to, according to this job listing, have some sort of subscription service. That it was later edited, but then that fact was reported by other outlets. So it looks like they are developing some kind of subscription service here.
I think it's Sean Udall that said this years ago that maybe they should charge certain users a little bit of money and they could really bring it in. I think it was Sean. I know we've talked about that on the show. Like would I pay $1? Would I pay a couple dollars to follow certain? I don't know. You'd lose a lot, so I'm not sure it's the way to go or not. But I'm not surprised that they would explore something like this. Full disclosure, I'm long Twitter in my long-term account. I bought it back when it went under 30 because I wanted the stock back. Obviously, it's been a pretty good one because it's back up here at 35.85 now. I traded it yesterday on this news, just playing it like in my trading account as well, buying it and selling it. So I don't know if it continues to go up from here, but you get this follow through. It's a big move. I think I'd wait for a pullback now to get in, but I still like the story.
Yeah, I have it long term, and thought about
You've had that
selling
for a long time too.
Yeah. Just thought about selling. I actually was really just getting tired of it. That last sell off from 38 down to under 30, and I'm like, man, it's just like the same old story. Gets up in the upper 30s, near 40s, comes back down. Overall, just hasn't, since its IPO, just hasn't been the performer that it was. It opened at 40-45 area. got over 70. I mean, it never has. They got to do something. The monetization. I mean, they got the traffic, they got the eyes. I mean, everyone's on it. The problem is that a lot of people are turned off because there's so much fake news and trolls on there and everything. So cleaning up the platform, maybe making people pay for it. Maybe that's the thing, but it's just been a long time. I mean, Jack hasn't been able to do anything with Twitter as opposed to what he's been able to do with Square. So, Spencer, I know you got a theory on this one about Twitter.
Oh, about them being taken private? Yeah, I believe they're going to be taken private eventually. I believe.
Think somebody's going to buy them out?
Yes. Oh, well, remember they had the fight with Elliott Management, Elliott and Silver Lake, and they came to that deal and they gave away.
It's just valuation, which has always been some of an issue. It's not crazy expensive, but on an earnings basis, it's not that bad. But you got $27 billion company. It's not like it's a $7 billion company. Somebody just go gulp. It's a big chunk to gulp. So because it's 27 billion, you figure they got to pay a premium, so you're going to probably be looking 35 billion if you wanted to try to take them out. I thought, we thought years ago maybe Disney, when the stock really started getting weak, or one of the older media companies there, because obviously the social media, want to get into something like this. It's never materialized, so I don't know. I think it's a big chunk to gulp. I'm not saying it couldn't happen. But it's not as easy as if it was trading like at $7 billion, where somebody just got dropping the bucket list.
They've never made over $1 billion. One quarter they were at $1.7 billion, and that was Q1 of 2020. Or excuse me, no, it was the last quarter of 2000.
Revenue.
Yeah, revenue. I mean, and you just look at these numbers. Yeah, they beat estimates almost every time, but there's just like 548, 573, 589, 731, 664, 700. I mean, come on, they gotta have like a quarter, they make 1.5 and then they make 2 and then they make 2.5. If not, this thing is just going to persist to be in a trading range here. And I don't know, maybe the subscription is the key to it. But I mean, you look at, the revenues from some of these other big techs that IPO'd at the same time. I mean, Facebook, 17 billion, 20 billion. And then Spencer also mentioned Snapchat. I mean, it doesn't quite, its revenues are still lower, but man, oh man.
It never caught on with the masses like Facebook. I mean, if you like sports, it's great. I mean, a lot of people who are on Twitter like sports because you get people, ranting and talking, and it's kind of fun. In the stock market, it's definitely related. Every trader should be on Twitter and following tweets because you get information from it. But it's really like information too. It's an information source as well, like similar to like, a Bloomberg to a certain extent. I mean, there's people who are, trying to break information, break stories on that as well. And, and people are using it as an alternative in some cases. I don't think it works as an alternative to the headlines. Why, still subscribe to the Benzinga Pro, because it doesn't work as well because they don't get the headlines. Like some people say, oh, I have a Twitter account, I don't need a news feed. You need the headlines though, because they're not like coming in. It's a couple minutes before often a personal tweet. Now rumors and stuff will break on Twitter because obviously you've got companies that have to make sure they don't just want to publish every rumor. But when you get actual breaking news, Twitter's still behind on that.
And you have people with ulterior motives on it. And that I think that's the best thing. But it's trading up here. I believe it's trading up 59 cents here. It hit that high from yesterday is really going to be critical moving forward. I hit 36.98 in yesterday's session. You ended up backing off that quite a bit. And returning to the scene of the crime on June 8th, it hit 36.94. So major resistance at 37 until they can take that out. Buck away for now.
All right, let's do one more in the chat before I bring on our guest quickly. Let's just look at Wayfair here. This is from Bull for Trading.
Just unbelievable moves here. It's consolidating. It looks like to want to go higher again. I mean, every time you think it's been just, you think about where we were in March, it was $21. It's up 1,000% in 3.5 months. So if you're in this, It's chasing. I would not want to own it under $200, but if you're in it and you've been riding it up, keep bringing up those stops. I'd have my stops sitting. If I was in this from like $50 or $80, say it.
Well, I mean, you're not going to go too tight. You're not going to go 218, are you?
No, you can't go tight on these. And that's a point too.
200.
Yeah, 193, that low from June 29th. Below that, I wouldn't want to own it. But I'd say you just keep bringing up your stops. I mean, you're going to have to give it. You're not going to get on the top with that type of trading strategy. You're never going to get out the high. Could it stall? It could stall out any time. It's impossible to predict when this party ends. It is a party. Wayfair isn't taking over the world here. I mean, it's up 1,000% in 3 months. Eventually, it's going to have a serious correction to the tune of like losing like $40 in a day, and everybody's gonna be like, "What the hell happened?" I mean, or $50 in a day. But it's been on such an incredible run. So props to everybody who bought it here. I thought when it went from 30 to 100, it was overdone. Now it's 221. So these things can just stay overdone. They sell stuff online. People are hungry for anything, a 1999 style, anything that is selling online.
Shorter term, I would be keeping an eye on that 218 level. You had your high on Monday, 218, then you had an 1878, 18 even low, then an 1878 low, then an 1807 low from yesterday. I didn't have to worry about that. Now you're $6 away from it, but keep an eye on that. 3 lows within 70, 80 cents on a big stock like that shows you that there was a buyer there. Use that as a key level. 218 Wayfair.
All right, 901. I want to bring on our next guest. So, Dennis, I know you.
Yeah, I got to go trade,
and Joel,
but I'll be listening in.
Joel, do your thing.
I'll stick on with you.
Stick on with me. All right. Our guest now, bring him on, Rance Masheck. He's been in the retail trading game now for a long time. He's the president and founder of iVest Plus. Rance, good morning.
Good morning. Glad to be with you.
Rance, so as I mentioned, you've been involved in developing trading tools, et cetera, for on the retail side of the market for a very long time.
For over 2 decades, yes.
Yeah.
Yep.
So, like, what if you? I'm just curious about like what the past few months have been like for you, because we've been talking about how the retail trader is having more and more influence and volatility, and you've been focused on that market for, like I said, 2 decades.
Quite a while. Yes.
Right. So,
yep. And we have some kind of interesting insight, because in our platform, in the iVest platform, we have journaling capabilities, and I took a look at some of what was happening, what people were trading, the types of strategies are going out, so we could talk about some of that this morning, what we're seeing happening. Yeah. And one of the things about our platforms is they're really designed nicely around options. And so I was looking at what kind of things people are trading. And it is kind of interesting how things have shifted literally in the last month. We had a lot of people going directional long calls and really taken on, in fact, actually a lot more stock buying than normal over the last few months. Now we've seen it shift again to more protective strategies. We're seeing some covered call stuff happening, things like that. We're also seeing a lot of spreads where you're seeing like bull call spreads and bull put spreads, where you've got some limited gains, but you're also able to block off, limit those risks in the trades as well. And I thought that shift from what we've seen in the last several months of a lot of, again, long calls, buying stock, that we've now started to see some shifts in some more, hedging type moves right now in the market. And that shift is, it's kind of an interesting shift happening. What also is interesting is that the volume is still very, very high. We're seeing literally year over year over a 50% increase in trading volume per user on average within our system, 50%, which is a pretty big move. It's also kind of interesting I looked at some of the top things being traded.
Yes,
and
tell us.
I thought that was real interesting. This whole work from home thing going on, that really seems to be, or not work, well, everything from home thing, right? So from the work from home thing, there's a couple of standouts that seem to be happening. Number one, the thing we're on right now for this meeting, Zoom, doing really, really well. CRM doing also very well. I think, working with this remote environments, and that helps to drive some of that. On the shopping side of that, so those are a couple ones that were standing out. On the shopping side of that, you mentioned just before we came on, you were talking about Wayfair, and we've seen a lot of activity there. And I'm with you on this, man. It's like, when is this going to move correct? But a couple other ones I thought were very interesting. Shopify has seen a lot of trading activity too, and that has also gone up tremendously. From literally sitting around, the $400 range in, at the end of March, now sitting at over $1,000. And I thought that was kind of interesting that there were so many people jumping into that as well. So you got, the Wayfair, the Shopify, in that area. And then the other one I thought was interesting too is, the entertain from home. So I got the work from home, the shop from home, and then the entertain from home, and a couple that are standing out there, of course. Well, by the way, also on the shop from home, I can't go without mentioning, of course, Amazon. We've seen a tremendous amount of volume in Amazon, but I will tell you, it's interesting on Amazon, it's heavily options trading. And I think it has to do with a $3,000 stock, right? People can
Right.
trade it a little bit
Right.
more cost effectively when they turn to options. So we're seeing a lot more in the options activity there. But then also on the entertainment side from home, gaming, Akamai, AKAM, and ATVI, Activision Blizzard, both seeing a bit of trading activity, although Activision has performed better than Akamai. And then, of course, on the stay-at-home thing too, that seems to be, and it makes sense, I think, was the Netflix part. Netflix doing really well too on that. So that's some of the things that we're seeing traded, and some of the action we're seeing, where we're again seeing this move to a little bit more protective, a little bit more. It's still options trading, but still a little bit more conservative approaches right now than we were seeing, a month or 6 weeks ago even.
Rance,
So-
I have to ask you here. Have you read all those books behind you? What are those books about? And
It's a
do you-
virtual.
I'm going on vacation. I'm going on
Virtual
vacation next week, and I always like to read a book or two. Do you have a book recommendation for me?
Well, I'll tell you what, it's going to be kind of an interesting winter, but
That's a virtual
money,
background, isn't it? Yeah.
it is a virtual background, if we want to.
Oh, the old virtual. Oh, you got me, Rance. I thought you were some rocket scientist.
Well, here for the rocket scientist stuff, we have this background here where we're out on the Enterprise. Sometimes you just really want to get away, so we have the vacation things, and then sometimes you really want to get away, and that's when you go out in space because of all
This
the
guy's
space-
high tech.
So, there we go.
Rance, do you feel, on a more serious note, do you feel like how do you feel, how do I phrase this? How irrational do you feel the retail side of the market is now compared to 2099 or
Oh, I think it's crazy. I'll be honest. I think it's crazy. I don't understand when you have some of this disruption that we have right now in the market, and what is interesting though is where the money's going, right? Because if you look at stuff like Netflix, which is seeing a lot more subscribers come on, we'll see if that sticks long term. Things like Amazon, where people are shifting them more online. I think it's going to be interesting when it starts to go back to norm, because I don't think the retail is going to come back as quick because of such a shift in behavior to more. I mean, not that there wasn't already a shift in behavior to go online, but things that people normally wouldn't have bought online is going there, are going there. So I think that it's going to be an interesting thing what's going to happen with retail long term. But what I don't understand is why some of this is not imploding a lot more than it has, considering where we're at, considering the overall economic picture in a lot of these. I mean, you get companies like Hertz that files bankruptcy and still trades at where it was trading. Some of this just does not make sense. And I think that is a concern, right? And we're seeing a large increase in retail activity. Maybe that's also because people are hanging out at home, but some of this, I just don't understand why it's so strong. So where I'm at personally, and what I see and what we're seeing with traders on our platform is people are taking advantage of it. But that's another actually interesting stat. Length of time in trade. Length of time in trade is dropped by about a third from where it was. So we were seeing on average in our platform, on average about close to almost 6 weeks in trade. And we're seeing it now under a month in trade. So we're seeing people on shorter leashes on this. Now we have swing traders and, really short-term trades as well, but I just took that kind of as an average overall. So I think we're seeing shorter leashes, but people trying to take advantage of where we're at in the market right now. But I'm with you. I don't know how this is going to, some of this doesn't make sense to me on the old irrational exuberance that we saw back then. I don't know if I'd call it irrational exuberance, but there's definitely some, I think, irrational action going on in the market. So I think it's important to, I'm riding the wave, but I'm also keeping real tight leashes on this and doing protection strategies and that in the same time.
Maybe board exuberance. I don't know. Maybe.
Right. You know what? I think that. So Akamai and Activision doing well. Well, for people that aren't into that kind of gaming, they're doing it online. They're doing some of this stuff as with trading. So I think we're definitely seeing the increase in volume is impressive. To see a 50% year-over-year increase in retail volume in what we're in our viewpoint. And I realize that's not the hallmark of it. In our viewpoint, we're also seeing. By the way, I just looked at the NASDAQ numbers. The last 90 days, it's up 69% in stock volume and 38% in options volume over the last looking at the last 90 days compared to a year ago.
So all these stats you're giving us, I'm assuming they're coming from your platform, iVest Plus. Tell us.
Except for the last one, a little bit was the NASDAQ, but most of this is coming from the platform. Yeah.
Right.
I think a couple things about this that's unique. First of all, I heard you guys talking about news just a couple moments before coming on, and about Benzinga Pro. One of the things that we've been able to do is we've been able to take Benzinga Pro news and bring it into the Market Gear platform. iVest is the company, Market Gear is the retail product, marketgear.com is the site, but we've brought in the Benzinga news. And I got to tell you that when we first started evaluating the news to bring it in, because we had other news sources in, the developers and we spent the first few days of evaluating. We kept going back and ended up trading because the stuff was so actionable and so, current relevant information, and I heard the conversation about what's going on Twitter. Twitter's a great source, but you have to sort through so much noise. One of the things I love is Squawk that you guys have, and we have Squawk in our platform too. In fact, right now we're the exclusive Squawk on the go, where we have Squawk available in our mobile apps as well. And, Squawk is like GPS, it only talks when you need to take action, but what's said in there is so strong. And so the combination of having the news and that in the platform, along with the extensive capabilities around the extensive research we have, and then the options trading, and it's integrated trading right within the platform. So you can trade with any number of brokers. We're not a brokerage firm, but we hook up to them for trading purposes and all that. So it's a very powerful platform for your research in that. But the other one I just have to mention here is the journaling, because that's where a lot of this information came from on the stats. Very comprehensive journaling capabilities. And what we find is one of the most powerful parts of the platform is by monitoring what you're doing and what your results are, and looking at how you can improve on those results. And the analytics you get out of journaling is really phenomenal for helping people do that. So
for our listeners who've been around for a while and may remember Trade Architect from TD Ameritrade.
Yes.
Rance worked on that, just to give you an idea of just sort of how long he's been.
Actually, it was my baby. We launched that. I was in charge of that. Yeah, that was it. Yep. And I also was in charge of the integration of Thinkorswim to TD Ameritrade. I was in charge of the 140 technical projects that were involved in that integration. That was fun. But yeah, I've been around the game for a while. And one of the things that I did when we broke off of that and did our own thing here was I wanted to bring some things in that you didn't see at brokerage firms, and things like how can you monitor your trading more effectively and improve on it and those type of things. So those are some of the tools we put in, making options trading simpler with the way we do option strategy templates and all that. So we got to do some things that we couldn't do when we were at Ameritrade, and that to bring some really cool tools to
All right, I'm gonna ask you one more, and it's a two-parter here.
Yep.
If you could just give us one stock you like right now, and also one tool that you think traders maybe don't use enough, or is perhaps undervalued, just as like a trading or a research tool.
Well, I'll tell you what, one of them that I think is, they went through a little bump in the road with some security issues, but Zoom is, doing really well. And I think that one of the big things that's happening with this company, and you know what, there's quite a few of them out there, but for some reason, man, these guys have got the buzz, whether it's the brand, whatever, they definitely get in the action on it. And, this is a stock that's been up, tremendously this year. So that 266.32 right now, where, back at the beginning of the year, it was around 80. And they went through a bump when that downturn, when COVID hit, but not much compared to a lot of others. And it basically almost doubled since then. So that's one that I really like on that front. And then on the tool front, I'll tell you that I think that, I go back to journal. And a mentor of mine said to me, a business mentor of mine said to me, what gets measured is what gets managed, and what gets managed is what gets results. And if you don't measure it, how do you know what's even wrong? And in a business, you got to look at your key metrics. In trading, it's what your results are. And, and how are you finding your stocks? What type of strategies you're doing? What are your exit strategies? And when in a journal where you can tag all these different things on how, where your ideas came from, or what strategies you were doing and all that, then you get these analytics about what's working and what's not. And then it gives you the information you need to be able to improve. And so I think that in trading, journaling is frequently overlooked because it's a pain to do. One of the things about our platform is it's automatic. You can add different tags and different categories in that, but a lot of what it does, identifying the strategy, all that, it does automatically. But so it gives you the information you need to see what's working for you and what's not. I think that's probably one of the most overlooked tools out there, is really effectively monitoring your results and doing more of what's working and stop doing what's not, and then work on improving it.
All right, we've been on with Rance Masheck. He's the president and founder of iVest Plus. You can learn more by going to iVest Plus, like the word plus.com, or also you can check out marketgear.com. Rance, again, some great feedback from the chat. So
thanks.
Based on that, we'd love to have you back. But in the meantime, stay safe out there, and
you too.
Good luck with that trading.
Thank you very much. Appreciate being here.
All right, that'll be a wrap for us. Joel, do you have any final thoughts, or should we just head out with our day?
I'm just looking at the S&Ps. We did get up to that 3170.75, backed off 3167. I mean, if you're trying to hold a short in this market, then really, above those pair of highs at 3174.5, you have to throw in the towel. That's your resistance for now. Support. I mean, we traded through the close quite a few times here. Pre-market low act is a good level too, 31.52 1/4.
All right, for all the tickers we didn't get to in the chats, I've written them down. We'll cover them at the 3:40 show. In the meantime, thanks to our guests today, both of them, Rance Masheck and Marc Chaikin. I want to also put a new URL on y'all's radar, benzinga.com/premarket-prep. We sort of relaunched our pre-market site, or where the show lives on Benzinga. So I'll put the link in the chat there, but if you can check it out, give us some feedback, we would very much appreciate it. That's benzinga.com/premarket-prep. There's the URL in the chats. Please remember, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Quick question from the chat I'm seeing. The afternoon show is in the same location as this, so it's on our YouTube channel or on the very same page I'm now putting in the chats. So also youtube.com/BenzingaTV. That's all I got, I think. So hit that like button. It helps us out with the algorithm. We appreciate that. And like I said, Joel and I will be back at 3:40 to answer more of your questions. In the meantime, everyone, have a great rest of your Thursday and stay safe and good luck.